Students, we today revise the topic cash flow statements. So I have already given a balance sheet in front of you. Here you see this is a balance sheet of a company. The balance sheet has having two sides, equity and liability side and asset side. You go to the asset side, equity and liability side. Number 1, main heading is shareholders fund. Under that you see I have written FOI. This means F means financing activity, O means operating activity, I means investing activity. When you go to the balance sheet, liability side, share capital is the first item. There you see it is written as F. That means it is written in the financing activity only. If the share capital is increasing, we will be writing it as proceeds from share capital. And the second item is preferred share capital. If the preferred share capital is increasing, we will write proceeds from preferred share capital. If it is decreasing, we will write as redemption of preferred share capital and will be put in bracket because it is a negative activity. Then the next item is general reserve. When the reserve is increasing, we will write it in the operating activity as transfer to general reserve. Then the next item is profit and loss account. That will go to the operating activity. If the previous amount is less, that means it is a profit. If the previous year amount is greater than the current year, it will be net loss. Then come to the next heading. It is known as non-current liabilities. Non-current liability will be having debentures, public deposits, loans, etc. If the amount is increasing from the previous year, we will write it as proceeds from debentures, proceeds from bank loans, proceeds from public deposits, etc. Similarly, when the amount is decreasing, we will write as redemption of debentures, repayment of bank loan, repayment of public deposit. All this will be in the bracket only. When the amount is when the company will pay the money, it is a negative activity. You have to put in bracket and you have to consider it as a negative value. Then the last item in the liability side, it is known as current liability. So simply understand there is a rule for current liability. Rule is that when the current liability will be increasing, you have to add in the operating. Similarly, when the current liabilities are decreasing, you have to deduct. Then we will move to the next asset side. Asset side we start with non-current assets. That particular heading has 3 important items. First one is known as non-current fixed assets or fixed assets tangible. Non-current fixed assets, bracket you write tangible. Tangible means the assets which you can see and touch. So in this case, when the amount is increasing, you have to understand it is a purchase of fixed asset and it is a negative activity. We will go to the investing activity. Similarly, when the amount is decreasing, you have to understand that it is sale of fixed assets tangible. It is a positive activity. We will go to the investing activities. Then comes the non-fixed assets intangible. Normally, when the amount is decreasing, you have to write it as fixed assets intangible written off. Normally, goodwill comes under this category. We will write as goodwill written off, and you have to add in the operating. Similarly, if the amount is increasing, you have to understand the company has purchased the goodwill, and it will go to the investing activity. Then comes the main head. Then one more item will come after that. It is known as non-current investments. Similar rule is there. When the amount is increasing from the previous year, we will consider as purchase of non-current investments. Similarly, when the amount is decreasing, we will consider it as sale of non-current investment and we will go to the investing activities. Then comes the current assets. Current assets, simple rule is there. When the current assets are increasing, we will be deducting in the operating. Similarly, when the current assets are decreasing, you will be adding in the operating activity. But when you consider the current asset, always remember that you cannot take a cash in hand, cash at the bank, and investments. These 3 items are known as cash equivalent. These things you have to take at the last of the numerical. You have to consider cash flow from operating, cash flow from investing, cash flow from financing. Then you have to add all the 3 items. and that amount will be added to opening cash balance, that is the cash balance of previous year. Then the answer will be cash and bank balance of the current year. Then only your current cash flow statement is correct. These are the important concepts you have to understand when you study the cash flow statement. Similarly, outside of the balance sheet, when the amount is given for tax, you have to prepare an account. Similarly, when information are given for fixed assets, you have to prepare an account. When the information are given for investment, you have to prepare separate account. Then in that case, you have to forget about this rule and you have to look into the account. Your purchase will be two cash will be the purchase and by cash will be the sale as far as fixed assets tangible account is concerned. So go through this one. You take the balance sheet first. There you mark F. F means financing activity. I means investing activity. O means operating activity. I hope you understand. Very simple it is. Very easy topic it is. Normally when we consider the book CBSE board examination, 99% students will make this question very easily, very correctly. They will get full mark. Normally this topic is not asked for 6 mark question in CBSE board examination. Thank you.